Oil prices have reached a 6-year low as stocks continue to plunge in the United States. The world's biggest oil producers are producing oil at really high rates, and as a result, oil prices fell to $43.08 a barrel, which is a 6-year low. OPEC said that its output surged to a 3-year high. The cartel produced over 31 million barrels a day, more than 1.5 million barrels above the ceiling it agreed to just a month earlier. Oil is coming from Iran, Iraq, and Saudi Arabia. Iran seeing higher output, its highest oil output since 2012, which is a sign that it is very ready to take advantage of the proposed nuclear deal. And non-OPEC oil is also surging from countries like China and Colombia and Russia, and oil production from the North Sea. And the data shows that there is a real battle going on in the oil market where the oil producing countries are refusing to cut supply even as the prices are tumbling. And meanwhile, stocks are tumbling a bit in the US as well. The Dow was down yesterday over 200 points. When I checked just about an hour ago, it was down over 200 points again today. And this is connected not only to the oil production and oil prices that we're seeing, but also to the Chinese yuan and the fear that many individual stocks are just in need of a correction at this point. So a couple of interesting discussions to have here. One is the U.S. economy being increasingly dependent on China, and this has several components to it. Number one is partially because of U.S. corporations depending on China for production. When you see made in China on stuff, that is a dependence on China by the U.S. economy. And also, and you've heard about this from both politicians on the left and right over the last decade, because China is increasingly a larger and larger holder of American debt. So we have to continue watching this, Lewis. And I'm always fascinated when we see big changes in oil prices, because there's an interesting thing that happens when oil prices go down. All the prices that went up when oil prices were high don't go back down. Food prices are sky high. Oil and petroleum costs are a big factor in food production. Food prices have not been dropping as oil prices have dropped. And the other one we talk about often is airfare. It's true that airlines buy their oil several years in advance to sort of have a known cost, but it's a major part of their price surges, right? When oil prices surge, ticket prices immediately surge, fuel surcharges and other costs go up. When oil prices fall, they remain constant. Maybe you see some inflation-adjusted decline. Often you don't. And in fact, airlines are currently under investigation for price rigging. And this is collusion between airlines that is being investigated to keep prices artificially high regardless of costs. So that only partially relates to oil. But we've seen that time and again, Lewis.
Yeah, well, when we see such a drop in oil prices, you would expect to see that reflected just about everywhere because things need to be shipped. So there's probably this collusion happening, all across the shipping and transportation world, right?
It's hard to pinpoint without really looking into it at what point is the price gouging happening and the artificial price inflation. But we digress from the main story, which is oil prices at a record low, stocks tumbling. We're going to continue following it, particularly in the context of the Chinese economy. Let's take a break. So much more coming up today.